It's a cycle of life that anything that goes up has to come down and anything that goes down has to come up. But the human psychology is such that when this involves money, people panic and we sell the asset. This is one of the fundamental reasons why we have times in stock market when it goes up called bull market and when it goes down called as bear market. Recently, the stock market is following a downward trend, so people are talking if the stock market is crashing and if yes, what can we do to lower its impact on us financially? I'm going to spell out my perspective, what is a stock market crash, and my top 5 actions that you can take to dampen that effect on you financially if the stock market goes down in value. Hi, my name is Sunny and welcome to my channel Sunnysnippets. Here I try to make videos that affect a common man financially. If you're new to this channel, please smash that like button as that will help me with the YouTube algorithm and it will be highly appreciated. As we all know, stock market is a platform where buyers and sellers agree on price discovery of a particular stock. There are so many other external factors that affect the pricing of a particular stock from a buyer's and seller's perspective. Apart from the technical reasons, the most important and integral part of this price discovery is human sentiment. Since different people react differently to same situation, so that leads to rise and fall in stock markets. The ups and downs in the stock market is as old as the stock market, meaning it is not the first time that we are seeing so much price volatility in stock market. During the short depression that lasted from 1920 to 21, also known as forgotten depression of the US stock market indices, fell by almost 50%. But the resilient American economy recovered quickly, and the following decade is called as Roaring Twenties. During those times, loose money supply and speculative buying in New York Stock Exchange led to an unprecedented asset prices. In October 1929, the equity prices rise to a very high multiples. As a result, we had a stock market crash. Some economists even say that the policies of the government of the day, including that of the Federal Reserve, contributed in a way to the Great Depression in 1929. On October 24, 1929, also known as Black Thursday, the New York Stock Exchange bubble burst. On October 28, known as Black Monday, and October 29, known as Black Tuesday, the Dow Jones Industrial Average fell by more than 20% over those 2 days. Eventually, that led to the stock market to fall by almost 85% from its 1929 peak. This financial stress spread to other countries, taking the US unemployment rate to as high as 25%. This is neither the first nor the last stock market crash in the history of markets. From 1929 to 2020, we had multiple stock market crashes, but over a long period of time, the stock market has gone up in value. When the sentiment in stock market is bad, people go and sell even their good investments, but the fact is the smart money moves in such panic times when everybody is fearful. If you see the 100 years of Dow Jones Industrial Average, you will see the market goes up and down during short periods, but for a longer period of time, the trend is always positive. The idea is if you do your homework, you know what you are invested in, the underlying asset is good, often it is a good idea to keep invested. If possible, buy more of the good stuff because that is selling at a discount right now. This is what some people call it as investor mindset, which is very different from trader's mindset. And investor mindset is all about finding good value and keep invested in for longer time horizon. Idea is to be greedy when everybody's fearful and be fearful when everybody's greedy, as often fortunes are made during times of panic. Avoid taking any financial decisions, whether it's buying or selling when there is a panic in the market. The best thing is to take a step back, give it a thought why you had bought that stock that you are now willing to sell in panic. The stock market is mainly based on investor sentiment, and there are times when that sentiment has got no correlation with the stock technicals. There are times when there is so much excitement about investment or there is so much pessimism as this is the end of the world. I clearly remember the times when we had 9/11 attacks in New York City and there was so much pessimism in the stock market that everybody was selling. Another recent event in early 2020 was because of COVID-19 news. People have got so much pessimistic view of the world that as if this is the end of the world, let's sell everything and we own and I don't know go where. In both the examples that I've mentioned, there was a disconnect between the reality and people's perception about the intrinsic value of a particular stock. I remember I was buying with whatever money I have in those 2 months in early 2020 as I could clearly see that there were some stocks that were hammered down just because people were selling in panic. There were some stocks that I have always wanted to have in my portfolio, but because those was very expensive before this panic selling, and I saw that those were selling at a huge discount of about 35%. Believe me, when I see a good stock on sale, I buy if I can afford to. Those investments have given me 100% return in about a year's time. Not because I was a rocket scientist or a guy with a very high Q, but I have a mindset where I try to be fearful when everybody's greedy, and on the flip side, very greedy when everybody's fearful. As a disclaimer, I'm not a financial advisor, just a common Joe on YouTube sharing his personal experiences about investing. And don't forget to consult your financial advisor before investing based on your personal financial situation. There is an old saying, don't put all your eggs into the same basket, and our investments are no exceptions. It is always a good idea to diversify your investment portfolio in such a way so that if one sector of the economy goes down, the others give you a helping hand. As an example, if you invest in high-tech, sunrise technology companies, then try to invest in conventional sector also so that you have a balance. I personally know people who have multiple houses and a nominal stock portfolio. People don't see anything bad in it, but from a diversification point of view, it's not a very good thing as most of the investment in this example are invested in real estate. Personally, I try to diversify my portfolio in such a way that not more than half of my net worth is invested in real estate. The reason being, in this part of the world, houses are very expensive. Thus, they take very large portion of my portfolio. Ideally, I would like real estate to be about 40%, then about 40% in growth stocks, with balance about 20% in cash or cash equivalents. Mine is a little aggressive portfolio, but you can have a split between growth and conventional or dividend paying stocks. The reason I keep reasonable cash in hand is because that enables me to take advantage of any market conditions where there is a panic, and if I see value in that asset class, I try to invest in if I can afford to. You talk to any financial advisor, they will suggest you keep 3 to 6 months of your living expenses set aside so that in case of any financial emergency, you have got money to tap into. If you don't plan for such emergencies in advance, the life becomes financially very challenging. Since we need money for food and housing, if we don't plan for financial emergency, thus in some extreme cases we are forced to borrow money at high rates of interest. So don't you think it's a wise thing to save money monthly from your paycheck, put it aside for a rainy day as your emergency fund by reining in your spending habits. A wise man once said, job is very unpredictable thing in North America. You will only know if you keep the job when you go back on Monday morning. Thus, in today's day and age, there is no job security. Hence, having a side hustle will give you a peace of mind and financial stability. Personally, I've always had a side hustle which has done two main things in my life. Number one, brought financial stability. Number two, the added income has given me more options to save and invest for retirement. I have always loved a side hustle, so much so that I've made a complete video about top 7 side hustle you can do. You can click on the top right corner if you are in mobile, and I will leave the link in the description too. Whole idea behind making this video is to educate my audience and share my thoughts if the stock market is crashing, and if yes, what to do now. If you like the content that I make, please help me by liking, sharing, and subscribing to my channel. Thanks for watching. See you next time in the next video on your channel, Sunny Snippets.